Hello everyone and welcome back to another episode of Swing Shift Trades. For anyone new to the channel, my name is Matt. I've been trading for over 4 years now, coming up to 4.5 years, and I came from zero experience up to being a profitable trader. So this channel is really aimed at those people who are new to trading, have a fascination for it, want to become involved in trading, but don't really know where to start. So if that sounds like you, then you've come to the right place. If you haven't seen them already, some of my previous videos have touched on expectations, charting software, and how to pick stocks. So if you haven't had a look at those and you're a beginner, then it might be worth just going back and revisiting those. So this video's an important one, and today we're really going to touch on how to build a strategy. So one of the first questions you might ask is, what kind of trader do you want to be? One, for example, is day trading. So these are people who really take multiple trades a day and work off short time frames. One of the characteristics of that is that you have to be at your computer or your workstation to keep an eye on these stocks or whatever indices you're tracking so that you can be ready to act, to buy and sell. It's very quick, very fast paced. One other broad strategy that you've probably heard about is swing trading. And that is really happens over longer time frames, could be 1 hour upwards really. So you're really looking at 1 hour time frames, could be 4 hour, could be daily or even weekly. But here you're looking at these slower oscillations up and down, hoping to find a good area where you can hop into a trade so that it will go in your favor. So one of the benefits of this type of trading is that you don't really have to sit at your computer the whole time. Because your trades are happening over a longer period of time, you can go away and do other things and just check in. And importantly, you can set alerts on your software. So if anything happens, it can help you decide whether to get into a trade or get out of a trade. So over the years, I've really settled on swing trading. And the reason for that really is because I don't have to be at my computer all the time. And I use alerts to check in. So that takes the pressure off. So some would argue it's a lot less intense. It's a less intense way of trading. It gives you time to think. And in my opinion, if you're a beginner, being a swing trader is a good place to start, exactly because it's less intense. And most of you might have other jobs as well, so you can't afford the time of sitting in front of your computer for hours on end. So one of the next questions that are following on from that is, why do you need a strategy? What's it for? And the answer actually might surprise you. If you're anything like I was when I started, you would have looked on the internet and you would have seen all these people driving around, so you've heard it, in their flash cars, showing you all these lovely indicators and saying, buy here, sell here, guaranteed strategy, win-win. Unfortunately, trading doesn't work like that. So here's the first bombshell, if you're a beginner, that you might not know. The first thing is that there are no technical indicators, single indicator, or in combination that will guarantee to predict which way the market's going to go. That's right. So despite what anyone tells you, there is no guarantee that the indicators you use will work every time. And anyone who tells you any different is not telling the truth. The second thing you might be interested in, and this, I had a hard time swallowing this at the beginning, was that most traders don't even have a 50% success rate in their calls. So what does that mean? That means when a trader places a trade, they are only correct in predicting which way it will go up and down 50% of the time on average. So that's a strange statistic that took me a while to get my head around, that I was going to lose lightly 50% of my trades, no matter what strategy I used. In fact, there are some traders that only have, in extreme cases, a 30% win rate. But here's the thing, you can still be profitable with less than a 50% win rate, even down to 40%, depending on your style of trading. There are a couple of caveats to this. I think there genuinely are 1 or 2 traders that I've come across who are very successful in deciding which way the market is going to go. But that's for another video. But for the vast majority, I would say 99% plus, they will not be able to predict the market direction more than 50% of the time. And if you're really good and really experienced, some people claim you can get up to 60%. But here's the thing, you can be profitable even if you're right below 50% of the time, going down to even 40% if your strategy is the right strategy. Interested? I thought you might be if you're a beginner. So in this video, I really hope to walk you through my strategy. So that will give you sort of a hook, somewhere to start. And over time, you'll develop your own strategy, because if you get 100 traders into a room, experienced traders, every one of those traders will have a slightly different strategy, even if they're the same type of trader. I mean, if they're a swing trader or a scalper, each of those will have their own particular method, their own nuance. And that is often surprising to many beginners. No two experienced traders trade exactly the same way. And the reason for that is that a large part of trading is psychological. It depends on your personality, what kind of trader you're going to be. So here we really come to the crux of it. Many people will say, okay, if my win rate might be only 50%, then why would I need a strategy? What's the point of having a strategy? And the reason why a strategy is so effective and so important is that it protects you from yourself. So what does it mean by that? Protect you from yourself. So let me explain a bit. If you trade regularly over years, you will have winning streaks and you will have losing streaks, no matter what your strategy is. And a funny thing happens. If you start to get 1 trade loss, 2 trade loss, a 3 trade loss, your mind starts playing tricks with you. Then it goes up to a 4 trade, 5 trade loss. You will get pretty despondent pretty quickly. And no matter how positive you are as a person, your brain will start playing tricks. So what I'm trying to say here is that a strategy gives you structure. Without that structure, you are just a snowflake or a bit of dust blowing around in the wind, directionless. You will have no structure, and that is a recipe for disaster. You're guaranteed to lose money. So in a nutshell, what a strategy does, no matter what type it is it gives you control. It gives you the feeling of control, and it gives you real control. And that control really comes down to 2 things. It's when to get in and when to get out. Without structure, making those decisions is very difficult. So what structure gives you is the ability to repeat the same scenario again and again and again. And if you keep doing that, you will be at minimum 50% right. So you'll be right half the time, maybe, and wrong half the time. But what you can control is when to get in, when to stay in, and when to get out. So that is why structure is so important. It gives you control. And of course, the big theory at the end of the day is incredibly simple. When you do lose, you try and lose a little. And when you win, you try and hang on and win more. So that over time, you win more than you lose. And that is the game of trading. We covered quite a lot there, but to sum it up quickly, we all need a strategy. A strategy protects us, and it gives us the ability to repeat. So what that means is recognize when to get in and when to get out. And that gives us structure. And when you've got structure, then you've got a shot at being a competent trader. So now all that said and done, what I think I'll do is we'll hop over to the charts and I'll go into a bit more depth about my particular strategy. So this will be important for any new beginners there who don't really have a strategy. This will give you somewhere to start, sort of a hook, a sky hook that you can develop as your own over time. So I think you'll find it interesting. Right, let's hop over to the chart, shall we? So what is my actual strategy? So I've got a chart pulled up here, Cassava Sciences. So If you're an absolute beginner and you're not sure about the charting software, then look back at one of the other videos where I've explained how to get to grips with the basics of this software, which is TradingView. So I mentioned before that I'm a swing trader. So what I'm really looking for is to spot these oscillations up and down and up and down and up and down and so on. And I also mentioned within that, my strategy is really focused on support and resistance. I also use trend lines as well and a couple of indicators just to give me more confidence in identifying my entries and exits. But at its core, I'm really a support and resistance trader. So what does that mean? The best way is really to show you what I've got on at the moment. I've got a watch list up here. Again, if you haven't watched one of my previous videos, it will show you how to pick stocks and put them onto the watch list. So go back and take a look at that if you haven't watched that already. So here on my watch list, I've got these stocks. So I do trade in stocks and shares for the moment. That might change over time, but on this, I'm using a small account for training and for this vlog. Here we go. So these are some of the stocks that I've got on my current watch list, and I'll take you through why I think they're interesting. So I'm working on a 4-hour time frame here. Sometimes I'll slip down to the 1 hour and I'll go up to the daily and even weekly chart. But what you can see if I zoom out or to here, what I'm interested in are these oscillations. As soon as I see oscillations up and down and up and down and up and down and up and down and up and down, that strikes my interest. My strategy is support and resistance. So one of the golden rules of forming a strategy is to keep it simple. And why keep it simple? It's repeatable. If it's repeatable, you've got structure. And if you've got structure, then you've got a shot at being a competent trader. So this is one of my stocks, and I would suggest that there is an area, it's come down and it's hit an up in the upswing here. So what I normally do is these dips, they're never precise, or they're very rarely that precise. So in order to sort of give us more leeway, draw this rectangle in, similar to this. And while I've got this rectangle, I convince myself by drawing this rectangle that this is an area of interest. So within this rectangle, the price might bounce somewhere. So in this trade, we've really identified an area of support here. So what I would normally do is set an alert. Say I identified this coming down, the stock price coming down. I would set an alert. To set an alert, you just press this plus button here, it comes up automatically. And I will put it halfway. The alert is set. If you want to see that alert, you go to this icon here, which is the alert button, press that, and the stock is PLCE, and you can see there's an alert there. So, and it's active. I've also got some other alerts here as well. So you can see that that alert is now active. So in principle, when this stock dropped and crossed that area, my alarm would ping, even on my phone as well, and I would go back and look at this chart and decide whether I wanted to get in. But at this point, a lot of people have different methods. So a lot of people here will decide, right, it's coming to this zone of interest. What is my exact criteria for getting into a trade? When do I press this buy button, which is up here? Some people will just buy as soon as it hits this alarm. Other people will use indicators. If I go up here, sometimes I do use a couple of technical indicators. I'll just press that. You can see that I use MACD, and also that's moving average convergence divergence, big words, and also the RSI. So I'll go into those a bit later, but that's not important for the moment because it's perfectly feasible to be a competent trader just using this support and resistance with this rectangle diagram. And what many people do to keep things ridiculously simple, they will just press the buy button as soon as this line is crossed halfway. If you do this, there really is no predictive value, in my opinion, to your analysis. So what I mean by that is if the price comes down and hits this, it looks like it hits this area of support, but so it could go up, and it looks like it did go up, but it could have gone down as well. So if you use this approach, there's no predictive value. If that's the case, you would expect in a neutral market, if the market's just chugging along, that you'd have 50% chance of being right and a 50% chance of being wrong. So the market will either go up or go down. And that is your strategy, to identify these areas, have a 50% chance of it going up or down. That is the simplest strategy, and one that many have taken to fruition. So you might say, okay, it's hit this zone, I'm going to press buy, but you've just told me it's not predictive. It might go up or it might go down. What's the value in that? Why is this strategy any good? So the reason is, again, is that it gives you structure. It gives you control. So what I mean by that is it gives you control of the things that you can choose. And those things that you can choose is when to get in and when to get out. So let me explain a bit more. If I was in this trade, I'm not in this trade, I was watching it. I'm a bit late to this trade because it's already gone up, so I'm not going to chase. If this had come down and it had hit this alert and it would have gone off, I should just have bought. And then say I was going to buy 100 shares, that would have been $474. So after that, it could have gone up or it could have gone down. And it looks like it's going up. So if I'd have bought long, I'm a long trader, I buy long, so I look for these upswings, then of course this looks good. How would you know when to stop and get out of a trade? Let me hop over to another trade that I've got going, which is one up here. So there's a few things going on at the moment. If you're new to trading, you place your trade, always place a stop loss. If it hits this sell stop, your trade will automatically close. So that would save you from a huge loss. And you've also got your sell limit or your profit take. So if the market goes up here, or the price goes up there, hits that, you've made your profit. So if it goes up here, I take a win. If it goes all the way down here, that's my maximum loss that I'm willing to take. So I use something called a 1-to-1 profit loss ratio. So that's my maximum loss and my maximum win. Where do you place these stop losses? So you normally place, or I place my stop loss just below the last area of support. So that was the last area of support. I'm going to put it below that, slightly below. Why do I put it slightly below? Is that it gives you a bit of flexibility in your trades. These ranges are not precise, so the price might drop a little before coming up. So it gives you that flexibility. Where do you take your profit? You take your profit by using a 1-to-1 profit loss ratio. So what I can do here is use my long position tool. If I click here, this will show you some stats where you can adjust your long position and your long stop position here. So if I put this into my stop, and you can see here it's a 0.6% ratio, 76% ratio here, but I would drop that down to 1 or around about 1. Should be about here actually. And there you go. And if I click that, that would be my long 1-to-1 profit loss ratio. So that just gives you a guide. So to reiterate that, let's get rid of that. To reiterate, you put your resistance line just below the rectangle box and below the last point of support here. So that gives you some leeway. So if it comes down here, breaks the box, then and goes onto your stop loss, you will stop your trade. If you're lucky, it will keep going up and you will hit your sell limit and make a profit. So the trick here is with experience, you will close this trade over time a little bit earlier. If your trade starts to go up in your direction, you hang on longer. Hopefully, hang on until you hit your sell. That's your profit margin. And over time, if you keep repeating this, what you're hoping is that you will stop these earlier, hang on to these until they come up and hit your profit. And if you make a little bit more profit than your losses, then overall you are in profit. So that is a very simple strategy for beginners. And this is the backbone of my strategy at the moment. There's nuance to this because I do use a couple of technical indicators and trend lines also, but this is the backbone. I'll talk about those other nuances in other videos because this is enough to get you started. So what I suggest is you use this method of identifying support and resistance, place your stop losses, have a go at that, and then watch it play out over the 4 hour time frame. So it's applicable to any time frame. You can use 1 hour, 4 hours, one day, 1 week, etc., 1 month if you want to, though the trades would take ages to play out. In this arena with a 4 hour chart, I've normally got about 2 to 3 trades going, no more than three at the same time, and usually I don't hold them for more than a few days to a week, rarely 2 weeks. So just to finish off, let's have a look at some of these other potentials. This is on my watch list again. So this one's okay. I'd normally give it an A, B, or C grading. I would give this sort of a C. So we've got an area of support here. The price action's gone up, then it's come back down, and it's hit support again, and it's gone up, and then it's gone down, and it's hit support again. So what do you think is going to happen here? So the obvious thing is that because it's bounced off support in the past, it wouldn't be a bad thing to think that this might come along and go up. But there's something holding me back here. I think we've got just emerging evidence there of lower lows. This is an example where would use a couple of technical indicators, MACD or RSI, more on that later, just to give me a little more confidence that I'm making the right decision. If I was going to take a trade here, I think we're pretty much there. I don't need the alert because I can see it already in this box, this triangle box. So if I was starting from scratch, what I would do is I would get the box, draw a line where I think the support might be, and then set an alert here. So when it hit that alert, and this could take week, you could do this in advance, days, maybe even a week in advance. So if it hit that, your alarm would go off. You come and set the chart. And if I thought it would go up, I'd go, you know what? This is worth a trade. Maybe I'll buy a few hundred shares here. And that would be it, just pressing the buy button. So I might well place a trade on this today. I will let you know in the next video whether I did or not. Let's have a look at this other price here. This is RAIN. Stock, you can see again, I like this oscillation. It went up, it went down, it's gone up a bit, down, up, down, up, down, up, down. So again, I would give this a C grade. So a perfect A grade would be smooth oscillations over time. This is a bit more sketchy. It's gone up, gone down. There is an area of support here, but it's a bit more sketchy. So you've got one here, and then it sort of came back down to here again. So it's not really a brilliant trade. So I would give that a C at the moment. So here's another one, 4 hour chart again, and you can see there's been this area of support. It's gone up, it's gone down to support, it's gone up, and it's gone down to support again. And yes, it looks like it might well be on its way up. So I've put this in purple because I've just been watching this trade, but I didn't actually take it. I've missed it. I'd never chase a trade, so it's already on the way up here. So again, I would have put my alert down here somewhere, and if it hit the alert would have gone off, and then I would have bought when it hit the alert. So they're the trades on my watch list. None of them are great. I wouldn't give all of these an A grade. I've got one going at the moment. This is optical, and you can see why I've got this. There was an area of support, support, and support. So at the moment, I'm a whole whopping -$7 down. So I'm hoping this will go up. So my stop loss is set here, just below the area of interest and below the last area of resistance. And if it goes up, I've set a 1-to-1 ratio. If that's my area of maximum loss, a 1-to-1, roughly. So if it hits that, then it's all gravy. So really, that is as simple as it gets. So again, if you can keep this simplicity and keep doing the same thing, you can look at one of these charts in a few seconds and you'll be able to identify whether it's a good setup or a bad setup. And again, it's not necessarily predictive. You do not know which way, after you've made your choice, those trades are going to go with you or against you. You do not know. But what setting those sell stops do is give you structure. And again, once you've got structure, you can start over time to learn how these charts look. You can get out if you're on a loss a bit earlier. And if you're on a win, then let it run for as long as you can, hopefully until your profit. So hopefully over time you're profitable. So you make smaller losses and larger wins over time. But you will lose up to half the time, which is nothing unusual. So you have to get used to losing. So bizarrely, the take-home message here is you have to get used to losing to win. Well, I hope that gave you just a very brief introduction to my strategy. So again, there is nuance to this strategy, and I'm going to take you through that again and again through the episodes. And more than that, I'm going to use real money and I'm going to show you my real account so you can see what I'm actually doing and whether it's successful or not over time. So this is so simple. It's such a simple strategy to get you started. So my suggestion would be is to use a paper trading account and get used to setting your take profits and your stop losses. Get used to reading the charts and do it again and again and again. So this is the backbone strategy, support and resistance with some nuance. So we'll add in one or two indicators in the future and maybe some trend lines as well. But even without them, it's perfectly realistic to become a competent trader just using support and resistance. It's the backbone of my trading. Well, we covered a lot there, but I hope it was really useful for you and that after that you've got an essence and a taste of what a strategy might be and how it could apply to you. So I personally am a big fan of swing trading just because you can go on and do other things with your life and you're not so pressured to be at the computer all the time. And in the next video, what I'm going to do is show you what trades I've got on my watch list, and we'll go through the trades and I'll show you why I pick them and how I apply my strategy to trades in real time. So we'll go through exactly what trades I've got on and why I chose them according to my strategies. And then we'll also go through how they turned out, how some of my trades turned out. So if you want to know how I apply my strategy to real stocks, real trades, then that's going to be in the next video. So as always, thank you for taking the time to watch these videos. If you do like them, don't forget to press the subscribe button. And most of all, I really hope you're enjoying the beginning of your trading journey. Thanks for watching.